Yo, what's up everybody? In this video, I want to go over a couple trades from Tuesday, March 22nd. I actually got a live recording of what I was watching for on Bookmap about reading the tape and a long trade that I took on the S&P 500. So I'm going to go back and replay this live video, show you all what I was watching, why I was watching it, and the context behind it. And then I'm going to get into some other trades that we took in my Discord community, both on the S&P, NASDAQ, and a really, really good trade on Tesla. This thing just keeps on running. So we're going to break down all that. Before we get into it, I'm going to link my Instagram in the description below. I definitely recommend following it at Trade. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you are not going to find anywhere else. Link is in the description below. You're seriously missing out if you're not following it. But now let's get right into this recap. So first, and I would say the most important concept to trading is understanding market context. The past week and a half or so, we had a very strong uptrending move where our dip got bought last Monday, Tuesday, and we've been rallying, making higher highs, making higher lows. And from the lows prior to the market open today, it was over a 450 point move where every single pullback got bought up at demand. And I have uptrending rules, and they are in effect once we start seeing the market react like this. Then on Friday, let me pull up a 15-minute chart. On Friday, March 18th, we had a very strong uptrending day, specifically putting in higher highs and higher lows, where at the end of last week, we closed near the highs. Then going into the weekend and the open on Monday, we were trading pretty much right near the close and right near the highs. So a lot of traders expect continuation. Traders that did not take this full rally last week are going to see the market open up on Monday, new start to the week, and they're going to expect some type of continuation, right? So now I'm going to go to a 5-minute chart, not realizing we are coming into a very strong and a key supply zone at 4471. We did a webinar on Sunday, and I said that this is going to be extremely tough resistance that I cannot get too overly long unless we are above the 4471. And how I view the move on Monday, I saw a lot of traders getting trapped in a long position is, this thing looks extremely strong. We have continuation from Friday's move. We have a strong uptrend, but you don't realize we're rallying right inside of a key supply zone. These are what I call FOMO buyers, buying, providing liquidity for sellers at supply, especially a key supply imbalance, providing liquidity for a potential high quality reversal. And as soon as we rallied into the supply zone, this thing started dipping, it started dumping, consolidated, pulled back up. And after this short setup yesterday on Monday, March 21st, after that short setup, there really wasn't anything of high quality in my opinion. Volume died out. We were moving sideways, and the move at 12:30 was sudden. I think it was off of news, and there really wasn't much to it other than those FOMO buyers in the first 10 minutes, expecting a breakout, expecting continuation, not realizing we're inside of supply. It's a perfect recipe for a reversal to the downside. So now on Tuesday, as the market opens up, keep in mind we still have those uptrending rules. However, now we're finding resistance at this supply zone, and this is the first time that we're really seeing sellers being present and showing effort in the market, whereas the past week and a half, we really have not seen it. So now fast forward to Tuesday, right prior to the market opening up, this thing acted as resistance not only once, but twice in the overnight session and provided some decent moves down to the downside. And now I want to get into the intraday context of the pre-market plan. I post these every single day in the Discord, the levels I'm watching, setups I'm looking out for, and most importantly, market context for you all to understand what I'm watching and why I'm watching it. Just play the levels. Don't play what you think is going to happen. That is very key. So I said we're having a hard time at the supply zone above, and we are bouncing out of 44.33 demand, which was created from that move yesterday. We bounced off it perfectly with higher volume in the overnight session. So I said a few scenarios I'm watching. Number one, it's very hard for me to be long biased on rallies up below this 4471, 4483 key supply. They are very key supply zones, and they have rejected the market in the past if you go back on the chart and see what we did when we tested it before. Very key, as they sold the market off very aggressively. So the way I look at it is we're in uptrending rules, but if the market presents a different reaction prior to what we've seen in the past, then a different reaction brings a different result. That's my philosophy behind the market. If we come up to supply and we have the same reaction we had prior, then yeah, we're going to get the same result. But a different reaction brings a different result. So I said, if we could start seeing strong buying above these levels, acting like supply is not there, confirmed by the tape. My trades recently, all my high quality trades, I need to see what's going on behind the candles. And I've really been focusing on reading the tape. It's a major component to a lot of my confirmation signals in the current conditions. So I said, if we could get strong buying above these supply zones, I will be playing longs targeting 4,500 bucks. Before the market opened up, I had no clue if I was going to trade this. I had no clue if we were going to sell off. I had no clue if we were going to balance. That's why it's very important to come up with your levels of interest. And instead of trying to predict what's going to happen, you got to sit here and react, watch price develop in real time, and react to what the market gives us. You cannot do anything else as a trader. And if you try to force stuff, you try to predict something, you are just going to lose 9 out of 10 times. Okay, so now the market opens up and we get a quick, just like yesterday. I mean, Tuesday's action looks identical to Monday's action, right? Strong buying pressure out the gate, 2 strong 5-minute candles right inside of supply. But if you are watching the tape at this point, I'm going to go back to Bookmap. We saw some key signs that buyers had control. So first thing, in the intraday commentary tab, this is basically where I update my thought process as the market is developing in real time. This isn't no hindsight trading. This is me saying what I'm seeing as I'm seeing it. So at 9:33, I said I cannot get bullish, still below those key supply zones I just mentioned. Bulls and bears are fighting it out. We're consolidating inside of supply, and the action is not leaning overly bullish just yet, and it's also not leaning bearish just yet either. The market is figuring out what it wants to do. Why should we figure it out for it? Let it figure it out. Let one side step into control, and then we can play on the same side. I said it definitely looks like we're going to break out here soon. I want to confirm with strong buying on the tape. So I'm going to try to get this replay to play in sync with the chart. So as the market's moving up, keep in mind that this chart right here, we start to see some very aggressive buying coming into the market. Buying meaning there are some strong green large bubbles, as you can see that just came in. We have a large passive seller. We see a red line on the heat map, and we got some very heavy lots coming in, aggressive buying coming at 44.75, 44.73, right at that supply zone. So yeah, this doesn't mean it's strong just yet. If we get strong buying near the highs and the market starts moving lower with aggressive selling, maybe some sellers stepping in passively, then yeah, this might look extremely bearish on the inside, whereas if you're looking at the candles, it might look extremely bullish. This is why I want to see what's behind the scenes, reading the order flow to the market. So the market starts moving up, and I'm going to fast forward it here. We get some more strong buying at 9:38 Eastern at 44.80, and more strong buying into that 44.83 area that was the start of that supply zone. So here's 44.83. We hit it perfectly, and there's some strong buying up there. Then the market pulls back. One thing I want to mention here, and this is what I looked at after the market closed and reviewing the charts, that strong buying that we saw earlier at 44.75, 44.77, we pull back into that. Passive buyers have liquidity here already, and as we pull into that, you're going to see what happens. We have a large aggressive seller. The market moves down until the last seller sells. A large passive aggressive seller sold near the lows at 44.75 at the same point where those buyers were buying earlier, where there was a passive seller. So that now acted. Look at that nice absorption down here, heavy size at the same point from earlier where we saw those buyers. And this could have been a valid move to get long right here. I did not see it happen in real time, but looking back and reviewing it, you could have looked to got long there for a nice quick little scalp to the upside. Then the market starts pulling back. We defend that 4475 area. We start consolidating. And then we get that break around 10 o'clock. So this is where my first trade came into the picture. The market looked like this. And what it looked like on a candle chart, if I could go back to it, is this right here. We were consolidating. We were moving sideways. And I want to go to a 1 minute chart to show this a little bit better. We were flagging out. We were consolidating. Here's those wicks at 44.75 that I just showed you. These could have been valid dip buy entries. However, why I didn't buy the dip was we were hit that key supply zone at 44.83 perfectly into the penny. Now, if we consolidate in or near supply, it usually means buyers are accepting value higher. And I want to confirm if I'm playing it to the long side by the tape. So I said I want to confirm it with strong buying on the tape. If we can get strong aggressive buying to come through, similar to those large orders that we saw at the open, I'm okay with playing a quick scalp into 4,500, but it must come above 44.85 or else it's not good. Here's the picture that I sent in earlier of the large buying, similar to what I just showed you on the recording of the Bookmap. So now what I'm watching for was the same reaction that we saw earlier, heavy buying volume, nice strong candles to the upside. I want to see that above 44.83, 44.85. And that was at 9:59, and at 10:01 I got in this position long. My mistake here was I should have played the S&P future. I should have played some lots, but I played the SPY 448 calls right when the market looked. So we start seeing buying volume come in right above 44.85, just like earlier, and then boom, I get in long right here at 10:01. Nice buying volume confirmed. Wiped away that passive seller, similar to the action that we saw earlier, and I'm long up here. My stop loss is below this 4475-ish, 4473 area. Target at 4,500 bucks, or 44.96. So now we start breaking out. That's what it looked like on Bookmap. Very large buying coming into the market, and I did not like around 10:07, 10:06. There was a hidden seller at 44.90. So as the market moves up, like I said, I'm still in this trade. Watch what happens at 44.90. So we don't really see a large passive seller there, but every time the market came into 44.90, we had a hard time getting above, and there wasn't much liquidity there. You know, look at that, 44.90. There wasn't much liquidity that was stopping the market with large aggressive buyers to bring it up. So I was not really fond of this movement. And in the Discord, I said there's a hidden seller at 44.90, tough resistance to get above. Bulls are trying to, but they're not showing much effort. And then at this point, we break above 44.90. I boosted my stop loss from earlier at the same point where we saw those large buyers on that break. And that kind of lined up with that passive liquidity and a nice low volume shelf here. So my stop now was below this. I wanted those buyers to defend it as they took the market higher to begin with. I boost my stop loss as the market moves in my favor. I honestly was not a fan of this action, and I'm not going to lie. You know, I trusted my plan. I trust how I trade, but this didn't look good to me. That wasn't valid for me to get out of a trade and exit for a loss, but I had to trust myself and trust the market because what happens is we pulled back and we never got below that 4482 area that I said I would stop out at. So watch what happens. We pull back into that. And this scenario right here, this second segment, was identical to the morning action that we saw. Pull back into that 4486 area, immediately find the bid, immediately break high a day, some nice strong buying coming in, and we had supply at 44.96 right up here. And as soon as we hit 44.96 supply, I'm out 90% of my position at 10.27 for $2.75. Not the biggest gain, but it was a very low movement, low volatile movement. And like I said, I wish I played the futures contracts versus the options because low volatility really doesn't pump up the premiums that you would like to see, especially when day trading. But I got out 90% of my position. My stop loss earlier was now at 44.82. I boosted up to about break even. The trade can never go red on me. And what I said in the Discord was, I don't really like this action. It's not very clean as I like to trade it. It's just a slow and steady move up. It's okay. It's more stressful in my opinion. It's like taking the stairs up and the elevator down. It could happen any minute, which is I don't like when there's not a lot of interest in the market. And here's the picture. I will make this full screen for you all. There's that clean break as I showed you in the recording. There's that pullback into the 45 or 44.85 area. Those buyers from earlier defended it. I got in long with those buyers earlier as they took control in the market. And then this thing started rallying. 44.96 hit. And then at 10:45, when the market hit 4,500 bucks right up here and started moving lower, kind of like a double top, I got out the remaining 10% of my position at $2.90. Now, then we start consolidating and we're moving sideways. This is a perfect recipe to trap some shorts, expect the market to come lower. We're still in uptrending rules. We're consolidating inside of supply. We're not finding sellers. It kind of leans towards the bull side. I'm not against playing short. I just don't think it's a quality setup. And I like trading when the odds are in my favor. And then we consolidated pretty much all afternoon and the remainder of the day. And this is what I call FOMO hours. If you did not get in the earlier move, which it really wasn't an easy setup. I'm not going to sit here and say, this did work out perfectly, but I'm not going to say like it was crystal clear and it was easy and this is how I always trade. It was a little different, but I like using the tape to kind of confirm my entry and make sure I'm on the same side as buyers. There's a full tape reading section to the A to Z course. I added it maybe 2 or 3 months ago that basically goes over this in detail of exactly what I look for and the strategies that I kind of base my analysis off of. But if you didn't get long at that move earlier, all afternoon for the next 3.5 hours, we consolidated sideways and you're going to get chopped up if you're trading this action, especially with lower volume. The next setup on Tuesday was Tesla, and I'm not going to lie, I have major FOMO on this. Seeing it work out perfectly and seeing what we could have made on it, it stings a lot, but I know there's always going to be another opportunity. You can't catch every move, and that isn't acceptable to chase a move after it's already extended. But it makes me feel a little better knowing some members in the Discord took this and it worked out perfectly. So I'm going to explain why I didn't take it and why I should have taken it. But just to understand it, the pre-market plan, we had Tesla on watch. We had supply at 958, and then we had a key level at 946.50 that I said once we could get a strong move above those levels, we're going to be on our way to 1,000 shortly. And I was really watching the underlying market with other equities like Apple, AMD, Microsoft, Nvidia. And if you were watching those today, they would have gave you no reason to sell the market short or hop on the bear side. Even NASDAQ, we got above our supply zone. And then once we were above this one, we had a target of the key supply zone. And this kind of helped, or Tesla kind of helped this move up. And the strength was definitely evident all day with other underlying equities. So Tesla opened up. And what I liked here was we were putting in higher highs, putting in higher lows. And I really like to see this formation down here at the lows. I like to see this formation over here as we're moving higher as well. And then we rally right into our key level at 946.50. If you've seen the last trade recap video I put on my YouTube, we took a trade on Tesla on, I think it was Friday, and it was a sick trade. The context is the same with this. But now we're continuing up. The market's strong. We have other market leading equities. And now my job is just to read the tape and see what's going to happen. I was watching Tesla above 947, and this thing did break above it. But I was not okay with taking it because I didn't like this evident flag. It looked a little too perfect, or it looked like something that a level that everybody was watching. And at the time Tesla came into this key level, NASDAQ was slowly, I'm going to maximize this, slowly near the highs, trying to move lower. So if we did reverse suddenly on NASDAQ and the S&P 500, this kind of would have prevented this continuation, especially that volume wasn't like super strong on the break compared to what we saw, the start of yesterday and even on Friday, when we broke out. So I didn't take it long there, and I actually warned members to just be a little bit careful with this because we had resistance. I said I'm not really interested in this until we could get above with strong volume confirmed by the tape at 947. And then I said the only problem with it is NASDAQ is right at resistance and looks to be moving lower. That's kind of an opinion and not really factual piece of information, which was wrong. And then I said I'd rather miss Tesla and it work out well than to take it. The action is not clean to me. Last week it was very clean. This one is a little different, which makes it a little lower quality of a setup. And going back, reviewing this chart, I mean, we pulled back perfectly into this area right here of demand, found a bid, and look what happened around lunchtime when no one's watching. We break above that 947 level. Volume's still not too strong, but what's key here is that we break and we retest. We break above resistance, we pull back, it acts as support. Then we break that again with continuation. Look at the buying volume came in, hit supply, and then this thing continued to squeeze. I said this in the webinar as well. When Tesla moves, she moves fast, and there's no reason to step in front of that train. Missed our $1,000 target. We still got 20 minutes till the market closes, but we're about 3.5 points away from that. Crazy squeeze above that 946.5 key level. Nice retest. If you break above resistance, a nice move would be a retest of it, act as support. As we move away from it, volume starts to build, and nice volume on that squeeze. A lot of shorts got squeezed out, and a lot of new longs built into the market. And then one thing I want to leave you all off with is, I posted this in the intraday commentary tab today, is day trading requires you to think less and react without hesitating. Going back to that S&P setup today, like I said earlier, I didn't wake up and say, okay, as soon as ES breaks above 44.71, I'm getting long, or above 44.83, I'm getting long. No, that's trying to predict, right? Instead, I rather react. I rather see what the market gives me and then trade based off of that. However, a lot of people cannot do that without hesitating. By watching the tape earlier and watching this setup on Bookmap, whether you even look at Bookmap, you don't even need Bookmap, right? You could look at the time and sales in level 2. That will suffice. That's all Bookmap shows, is a time and sales in level 2. But let's just say we see this thing starting to break out at 10 o'clock where I got long and we hesitate. We're not confident in it. We don't have confidence in our setup. And where I entered, let's just say, maybe you waited an extra minute or two. And now we're entering up here near the highs at 44.90 up here. Yeah, you know, this thing could have worked. And yeah, you could have made money off of that. But by you hesitating, you're skewing your risk to reward. So how I recommend combating this is you need to have confidence in your trading. You need to have something that works for you, and specifically you only, that you've tested, that you know what to do and you know what to do or what not to do. That brings confidence. Maybe record your screens, maybe journal everything in depth, but you need to build confidence in your trading, because confidence in your setups makes you think less. And by you thinking less and just reacting to what the market gives you means you're not going to hesitate, and you're going to take high quality trading setups, maybe before they break out, maybe right when you should, where your risk to reward makes sense. I said, did I wake up today and expect to get long? Definitely not. But I saw something intraday and I put risk on the table without hesitating or without thinking. If I see something that I like, I enter the trade, I respect my risk. As traders, we're risk takers. If there's no risk on the table, we're not going to make money. We're not gamblers. We're not entering for no reason other than we think something's going to happen. We're protective risk takers because we get our entry signal, we get our confirmation signals, and we put risk on the table. So I'm going to leave you all off on that note. I hope you learned something from this video. This was a very in-depth recap. I usually do this for members in the Discord, but there was a lot of lessons to learn today. Definitely comment if you have any questions. I would appreciate a like on this video. And if you want to learn more, check out the links in the description below. I offer a very in-depth and educational course that comes with access to the Discord at no extra cost. The tape reading section in there explains exactly what I look for on the tape. And the course is very detailed on things you're not going to find anywhere else on the internet, especially not on my YouTube. So I'm ending on that note. Peace out.